Hello everyone, my name is QIUYI, and today we will talk about the comparative analysis of Chinese yuan and Singapore dollar against the Malaysian ringgit. We are Group 3. Next, I will introduce the group members. Our group members are SENYU, JIANING, ZHENG, XIAOYI, ZHIXIN, and QIUYI.
In this project, we used several types of charts to support the analysis of exchange rate changes of Malaysian ringgit to Singapore dollar and Chinese yuan from January 2018 to December 2022. The first point, in order to support the goal to compare the trend of Malaysian ringgit with Singapore dollar and Chinese yuan, an interactive dashboard is developed using Microsoft Power BI. Power BI allows users to dynamically visualize time series data through line charts and bar charts. By selecting a specific year or currency, we can observe the appreciation or depreciation of Malaysian ringgit for each currency. This interactivity allows for a clearer identification of exchange rate trends and facilitates a side-to-side comparison between the Malaysian ringgit to Singapore dollar and Malaysian ringgit to Chinese yuan movement. The second point, our group is based on this link to obtain data information. To show the year-by-year comparison of the average exchange rate of Malaysian ringgit with Singapore dollar and Chinese yuan, these visual charts will provide a clear view of the relative intensity and fluctuation patterns of Malaysian ringgit relative to its two major regional trading partners. We believe that the bar chart will help visualize the performance of Malaysian ringgit with Singapore dollar and Chinese yuan over time, making it easier to detect periods of appreciation, depreciation, or relative stability. In addition, the bar chart can indicate the years when the exchange rate fluctuates significantly or is consistent, which may correspond to the Malaysian government's policy aimed at managing monetary stability. Finally, the chart will clearly highlight the highest and lowest exchange rate points between Malaysian ringgit and the two foreign currencies. These exchange values can then be linked to relevant economic and political developments such as the COVID-19 pandemic, regional monetary policy, or geopolitical tensions to better understand the potential factors that drive violent monetary movement. So the first point, numerical descriptive analysis. Numerical descriptive analysis is the process of summarizing and describing the main features of a data set using statistical indicators. To achieve the research objectives, different data analysis techniques will be applied to three targets. These statistical methods will help identify overall trends, volatility, policy impact, and historical exchange points in exchange rate. Our group compared the overall trend of Malaysia ringgit against Singapore dollar and Chinese yuan, using average values to calculate the average exchange rate for each currency per year. This helps to observe whether the ringgit has appreciated or depreciated over time. In addition, the standard deviation is used to assess the volatility and stability of exchange rates over a 5-year period. To better analyze the impact of the Malaysian government's policy on exchange rate stability, we use variance to reflect the degree of change in exchange rate values under different policy backgrounds. In addition, key policy announcements by Malaysia, such as interest rate adjustment or fiscal stimulus, will be mapped to the exchange rate timeline to assess their potential impact. And finally, to determine the periods of highest and lowest exchange rates, we will analyze the maximum and minimum values extracted from the 5-year data. These extreme points will be further studied in conjunction with major economic and potential events, such as the outbreak of COVID-19, elections, or trade disputes, to explain the reasons for these fluctuations. The second point, graphical descriptive analysis. Graphical descriptive analysis is a key component in understanding how exchange rate patterns change over time. By converting raw numerical data into visual forms, we can more easily identify trends, fluctuations, and anomalies. This chart is a dashboard made by our group with Power BI, which shows the analysis of the exchange rate of Singapore dollar and Chinese yuan to Malaysian ringgit. First, basic exchange rate statistics. This can show the maximum, minimum, average 50% centile exchange rate of Singapore dollar to Malaysian ringgit, and the corresponding statistical value of Chinese yuan to Malaysian ringgit, such as Singapore dollar maximum exchange rate is 3.57, etc. Second, exchange rate trend. Bar chart and line chart including Singapore dollar maximum and minimum, and the Chinese maximum minimum, showing the exchange rate in different years and year-on-year changes. Third, exchange rate comparison. Singapore dollar versus Chinese yuan maximum exchange. The bar chart related to comparison shows differences in proportion and other dimensions. There are also Singapore dollar versus Chinese yuan maximum exchange. Another set of comparison is shown from the perspective of the difference, such as 2020 Q1, Singapore dollar maximum exchange rate is 3.09, Chinese yuan maximum exchange rate is 3.05, etc. Judging from the trend chart, the fluctuation of the exchange rate of the Singapore dollar against the Malaysian ringgit reflects the interactive impact of the economic, trade, and financial policies of New Malaysia. The trend of the Chinese yuan against the Malaysian ringgit is also closely related to the trade between China and Malaysia and the macroeconomic environment. This chart presents the exchange rate dynamics between the Chinese yuan and the Malaysian ringgit from June 11, 2024 to June 11, 2025, with a decline of 9.41% in the exchange rate over the past year. This is the result of the entwining of multiple factors, including China-Malaysian economic and trade exchanges, macroeconomic policies, and international capital flows. Based on this chart, we can observe the trend of the line graph. From June 2024 to June 2025, the exchange rate between the Singapore dollar and the Malaysian ringgit experienced significant fluctuations. From mid-2024 to the end of the year, there was a significant downward trend in the exchange rate, which was closely related to the rhythm of global economic recovery and changes in trade data between Singapore and Malaysia. Entering 2025, although there were periodic rebounds, the overall trend continued to adjust in a fluctuating manner. Here are some key investment recommendations based on our analysis. So first, investors should be aware of exchange rate risks due to fluctuations of the Malaysian ringgit against the Singapore dollar and Chinese yuan, influenced by economic shocks like COVID-19 and geopolitical tensions. Second, differences in monetary policies and regulations between Malaysia, China, and Singapore make timing investments challenging. To address these, using data tools like Power BI to monitor currency trends and policies is essential. And of course, we suggest prioritizing investments in Singapore dollar assets for stability, while diversifying with Chinese yuan assets to balance risk and reward. And meanwhile, strategic timing matters. Investing when the ringgit depreciates may provide good opportunities. And finally, consider currency hedging instruments to protect against exchange rate risks and align investments with Malaysia's economic policies for better predictability.
In conclusion, we compared to the Malaysian ringgit, the Singapore dollar and the Chinese yuan exhibit distinct behaviors. The yuan is under short-term pressure from the economic downturn and capital flight, but it still has room to grow in the long run. Strong financial foundations and dependable monetary policy ensure that the Singapore dollar stays steady. Investors should manage a currency risk while striking a balance between stability and growth. Careful diversification can lead to the steadier and lost profits as regional trade grows and the China yuan gets global influence.